following is an update and technical analysis on gold futures based upon the daily interval, where we actually had a great risk-reward ratio short trade setup based upon the 236 fibs retracement correlated with this primary reactionary downtrend line, and that was a great sell-off right back. I had mentioned the 1911, call it the 382 fibs retracement, was a pivotal inflection point for any long traders and or bull traders to defend heavily, really at all cost. If not, watch for a nice clean breakdown sell signal. That would be the turning point for a great risk reward, add leverage to your play in a short trade setup. And the entire move from top to bottom, that entire trade was good for a 7.8% crash to the downside. And that is a very significant move for the price of gold, where bull traders and or long traders stepped in amongst the 1826.09 price support, had a nice double bottom reactionary low there. And what was so significant about that key inflection point and the bounce, completely gapped up here, a back test of the 1865.99 price support, we put in hidden, which you call concealed positive hidden divergences amongst all three technical momentum indicators, call it all four momentum indicators. And that was the catalyst for the big gap up counter trend rally, really retracing the entire move on that Friday's close, where the war really broke out there in Israel. And that was a solid daily candle close, complete bullish retracement there. And we recovered the 50-day moving average alongside the 200-day moving average. We ended up back testing the 50-day moving average multiple 2 days in a row there, and it was off to the races. And we have confirmed a solid daily candle close breakout above this primary reactionary downtrend line, ultimately taking out the 236 fibs retracement, call it the 1978.77 price resistance. And that is a significant key inflection point that has been breached as of now, and the bull traders, long traders have completely popped that level. So whether we get the backtest scenario on a reflection of the 236 fibs, if not, which would be a very long, very large move down for the ultimate backtest scenario of the primary downtrend line, offering a great risk reward long trade set entry to hone in on the 2010.69 price resistance, and then ultimately the top of the 0 fibs retracement, called 2088.97 price resistance, correlated it to the all-time high of gold, call it a multi-year price resistance level based upon the 0 fibs retracement. And that will be the more telling significant point if and when we go on to hone in on that key inflection point. But that is as solid as a daily candle close breakout as you can possibly get there on the daily interval. And then to conclude, deep diving into the intricacies of the critical technical momentum indicator landscape, you have the moving average convergence starting to hone in and take out the zero line threshold in the 12.26.9 space, whereas you have the stochastics 1033 momentum just fueling even higher above the 85 threshold. Just an amazing structure of the move that has been solidified within the price of gold, has completely blown past my expectations there in the oscillator as well, with just a ton of health being poured in all three technical momentum indicators. And when you have the fundamentals behind the technicals throughout history, the price of gold has always been influenced by three significant key factors, where expectations regarding real, not nominal, real interest rates, the trajectory of longer term energy prices, and the policies of central banks encompassing net gold sales and quantitative easing. In my opinion, it appears highly improbable that we will witness a substantial reduction in quantitative tightening unless a future crisis completely compels the Federal Reserve to change its course, and an increasing number of individuals and or institutions are coming to the realization that gold serves as a stable reference point in a world where currencies are growing increasingly vulnerable.